He's the richest human being who has ever lived. Not richest alive, richest, period, in the history of money itself. For a few weeks this summer, Elon Musk was worth more than $1 trillion. That's a number so big your brain can't actually picture it. So let's try anyway. If you spent $1 million every single day, it would take you over 2,700 years to spend $1 trillion. And then, just as fast as it appeared it was gone, Musk lost his trillionaire title less than 3 weeks after he earned it. So what's really going on here? How does one man end up controlling more wealth than the GDP of most countries on Earth, and why can that number vanish in a single afternoon? That's what we're breaking down today. Not the Elon Musk of memes and headlines, the actual mechanics of how this fortune was built, where it's sitting right now, and why almost none of it is sitting in a bank account. Musk's money story doesn't start with Tesla. It starts with PayPal. In 2002, eBay bought PayPal, and Musk, its largest shareholder, walked away with roughly $180 million. Most people who make that kind of exit slow down. Musk did the opposite. He put almost all of it into two companies that, at the time, looked like terrible bets. The first was SpaceX, a rocket company, in an industry where only governments had ever really succeeded. The second was an early electric car startup that would become Tesla. By 2008, both companies were nearly bankrupt at the same time. Musk was reportedly down to his last few $1 million, sleeping on a friend's couch, funding payroll out of pocket to keep both companies alive through the same holiday season. Then came the turn. A NASA cargo contract kept SpaceX breathing. A last-minute funding round, closed hours before the company would have run out of cash, kept Tesla alive too. From there, both companies started climbing slowly at first, then very fast. By 2021, Tesla's stock had exploded, and for the first time Musk passed Jeff Bezos to become the world's richest person. In 2022, Musk did something that looked, to a lot of investors, like a mistake. He spent $44 billion buying Twitter. He sold off large chunks of Tesla stock to fund it, triggered a massive tax bill in the process, and for almost 2 years Twitter, rebranded as X, was widely seen as a financial black hole. But Musk wasn't just buying a social media app. He was buying a distribution engine and a mountain of user data for something else he was building quietly in the background, an AI company called XAI. In 2025, X was folded into XAI, and by early 2026, SpaceX absorbed XAI entirely, in an all-stock deal that valued the combined company at roughly $1.25 trillion. Notice the pattern. Almost every major move, Tesla, SpaceX, Twitter, XAI, was really about consolidating ownership and control into fewer, larger pieces that Musk held a bigger and bigger stake in. That pattern is exactly what set up the moment everyone remembers. On June 12, 2026, SpaceX went public. It wasn't a normal IPO. SpaceX priced its shares at $135, valuing the company at roughly $1.77 trillion, instantly the largest public stock offering in history. More than double the size of Saudi Aramco's record-breaking 2019 listing. Musk owned about 38% of that company. Overnight, his personal stake in SpaceX alone was worth more than $760 billion. Add his Tesla shares, plus smaller stakes in X, Neuralink, and the Boring Company, and Musk crossed a line no individual had ever crossed before: a personal net worth over $1 trillion. Forbes and Bloomberg both confirmed it the same day. He wasn't just the richest man alive anymore. He was, by nearly 4 times, richer than the second richest person on the planet. His fortune that week was larger than the combined wealth of the next 3 richest billionaires put together. It even briefly climbed past $1.2 trillion as SpaceX shares kept trading above their IPO price. Now here's where the story most people saw online is misleading. When you hear trillionaire, you probably picture a man with $1 trillion in cash sitting somewhere. That is not what happened. Almost all of that $1 trillion was paper wealth, the market value of stock he owns, not money he can spend. And most of his brand new SpaceX shares were locked. Newly public companies almost always restrict founders from selling their shares for 90 to 180 days after listing, specifically so the founder can't cash out and crash the stock on day one. So the honest picture is this: Musk was a trillionaire on paper, holding stock he mostly could not touch, and a company that had existed as a public business for less than a week. That distinction matters, because paper wealth can disappear just as fast as it appears. And that's exactly what happened next. On July 1, 2026, 19 days after becoming the world's first trillionaire, Musk lost that title. SpaceX's stock slid, wiping out more than $50 billion of his net worth in a single trading session, and dropping him back under the trillion-dollar line. This wasn't the first time either. Earlier in 2026, restrictions on over $100 billion of his Tesla shares, combined with a dip in SpaceX's valuation, had already knocked him out of what analysts jokingly call the 4 Club once before. This is the real lesson hiding inside the trillionaire headline. At this scale, wealth isn't a fixed number. It's a snapshot of a stock price, taken at a single moment, that can swing by tens of billions of dollars before lunch. So if you froze the picture today, where does Musk's fortune actually live? Roughly 3/4 of it is his SpaceX stake, the most valuable piece, and the one he can sell the least of, thanks to the lockup period. A large chunk is Tesla stock and stock options, some of it still invested from a 2018 pay package that could hand him billions more once specific performance targets are hit. The rest, a much smaller slice, and the tens of billions, is spread across X, Neuralink, and the Boring Company. What's almost nowhere in that picture? Cash. Reporting going back years has described Musk as, in relative terms, cash poor for a man of his wealth, heavily leveraged, with shares pledged as collateral for loans. Because selling stock to raise cash usually means triggering a massive tax bill and moving the stock price. Which brings up the other question people always ask. Investigative reporting has shown that in 2018, a year his wealth grew by billions, Musk paid $0 in federal income tax, perfectly legal, because unsold stock gains aren't taxed as income under current law. Between 2014 and 2018, across years where his wealth grew by over $1 billion, he paid a combined tax bill in the hundreds of millions, a tiny fraction, in percentage terms, of how much richer he got. That's not a loophole unique to Musk. It's how wealth taxation works for almost every billionaire whose fortune is tied up in stock rather than salary. But because his numbers are so much larger than anyone else's, his case became the example politicians point to when they argue for a wealth tax. It's also why, when he crossed the trillion-dollar mark in June, it wasn't just a business story. Politicians on both sides used the moment to reopen that exact debate. So, did Elon Musk really become a trillionaire? Yes, for a few weeks, on paper, according to every major index that tracks this. That part is real. But the deeper truth is this: it was never really about a bank balance. It was the market suddenly agreeing to value 3 decades of extremely risky bets. Rockets that used to blow up on the launch pad. A car company that nearly died twice, at nearly $2 trillion, all at once. And the same market that handed him that number can, and already did, take a piece of it back within weeks. That's the real story behind every world's richest man headline you'll ever read. It's not a fortune, it's a live stock ticker with a face attached to it. If this kind of breakdown is useful to you, subscribe because we're going to keep pulling these headlines apart, one number at a time. Thanks for watching.